Welcome back. Let's talk commodities now, and to do that we bring up the charts to track just where light sweet, NYMEX light sweet and North Sea Brent were heading overnight. So some support to be found. Why was that? Well, essentially, yet again, OPEC in perspective, a joint OPEC and non-OPEC technical committee, no less. Destination Abu Dhabi, 2 days back-to-back, namely yesterday and today, talking about boosting compliance. How might that happen, you ask? Well, Pete McGuire from XM.com live in our Sydney CBD studio. Pete, welcome into the program. So, knocking heads together on neutral grounds, supposedly, what might emerge?
Well, good afternoon, Carson. Look, they've had a very nice run-up. When you think of where the market's, performed in the last matter of a week or two, it's had a very, very solid uptick. And I think that where OPEC are situated, there's no doubt from the compliance angle and, more importantly, those production cuts, they're fairly happy at these sort of numbers. But, we've got the hedge funds as well moving in, money managers stacking long positions. So I think overall the market's looking relatively okay. But as you know, volatility is very much a part and parcel of the crude market.
How much of this is a US dollar story for the hedges?
I think that's...
Yeah, go on.
Well, I think it's a large component, Carson. When you think of where the US dollar index was when President Trump was elected, it was around about 103. Now it's about 93. So, it's a 10% washout. And that's also contributed to the underpinning of commodities and, of course, crude oil. So, yes, I think further weakness. Have a look at inflation. Think about Fed President Bullard from St. Louis and so on. So all of those factors need to be considered.
The contribution of this via Baker Hughes. So we're back on the US producers now. We've seen a little, sort of a bit of a plateauing, have we not? Or you wouldn't even go so far as to say that?
Well, where it's sitting at the moment, yes, they've certainly, there's been no increase as far as rig count, but if you're looking at production, the US is up, I think about 14 or 15% versus June of 2016. We're at about 9.4 million barrels a day. So all of those factors in consideration. As the price goes up, and this is going to be very interesting, you look at August and September, if we see prices edging higher at 52, 53, then no doubt there's going to be more rig production, and that just seems to be the way of the world.
Now, the big sort of issue, though, on our minds for our miners has been runs up in steel prices. When will we see commensurate, matching with the iron ore price?
Yeah, well, I mean, when you're looking at the ore price, have a look what, around about that 74, US dollar a tonne. And taking into consideration we've got nearly 140 million tonnes sitting there in China on warehouses and stockpiles, there's growing concern that, if the market does turn, it's really going to have a, big, hiccup and washout. But at the moment, production's relatively strong, and, there's around about 2/3 of that ore, they're saying, is a lower quality. So they're really, using that better quality for steel production, and it's just sitting there to be used, probably towards that winter period.
Pete, did you say 140 million tonnes?
I think it's about 139.8 million tonnes sitting on warehouses.
And do you know the sort of figure on the amount of oil that's sort of being sitting around sort of in storage as well? Have you got a figure on that?
Well, remembering, Adam, that you've also, there are stockpiles, there are global stockpiles, there's US inventories and US, and then you've got strategic reserves across America, in Japan and many other countries, and China. So it'd be in the hundreds of millions of barrels. And also you've got containers, or pardon me, not containers, but oil ships actually holding oil. So, it's hard to put a headline number on it, but as far as OPEC's concerned, all of these factors at play, and a lot of the other producers, they're trying to rebalance their, the rebalancing is going to add to, hopefully for their sake, higher pricing.
Okay, we're getting inflation data from the world's largest economy, so gold, if you want to fall back on the traditional rationale for being in on that one, could well take another leg up if we saw signs of life. Are you putting your money on it?
Well, it's off from its highs a couple of weeks back at around about that 12.79, 12.80 number, Carson. It's running at around about 12.64. A couple of things. First off, if we had that, it was quite a nice uptick with those stronger than expected US job numbers Friday night. US dollar lifted, gold came off a little bit. if inflation doesn't really drive it and there's no political uncertainty, really I think that, you know, the only thing waiting for happen is if the US dollar continues its, you know, dramatic, you know, fall out of bed, that's going to force gold a little bit higher. But at the moment, you'd have to be saying, well, you know, maybe 1265, 1270 is the number, waiting for some other news to take place.
Pete, thank you as always. Talk to you in on. All the best.
Thank you. Thank you.
McGuire XM.com. We finish with a stock that really did pop today, and the ticker code is rather